Is DMAAU the next big thing in plant-based pharma? Let's dive into the initial public offering of Drugs Made in America Acquisition Corp, or DMAAU. This is a newly formed blank check company incorporated in the Cayman Islands targeting the pharmaceutical industry, specifically plant-based pharma. First, let's talk leadership. Lynn Stockwell, the CEO and Executive Chair, brings a wealth of experience from her time at Bright Green Corp. She's a powerhouse in plant-based pharmaceutical research. Her track record in managing compliance with federal standards and advocating for natural opioid alternatives is noteworthy. Then there's Glenn Werman, the CFO. With nearly 40 years in finance, including stints at Deutsche Bank and Morgan Stanley, he's no stranger to the complexities of SPACs. His expertise in financial services and organizational restructuring is key for DMAAU's financial health. Now onto the IPO details. DMAAU will trade under the symbol DMAU on NASDAQ. They're offering 50 million units at $10 per unit, aiming to raise $500 million. Each unit includes one ordinary share and a right to receive 1/10 of an ordinary share upon completing a business combination. F. Hutton is managing the IPO, and trading is expected to begin in the week of October 14th, 2024. Financially, the company has a market cap of $706.44 million, but no revenue or net income in the last 12 months. They also have no employees as of the IPO filing. Let's analyze the industry focus. The pharmaceutical sector, particularly plant-based and biotech, is rapidly evolving. With growing attention on plant-based medical solutions, DMAAU's focus could capitalize on emerging trends in biopharmaceuticals and personalized medicine. Their emphasis on US-made pharmaceuticals aligns with the push for domestic drug production. As for leadership strength, Lynn Stockwell's background in plant-based pharmaceuticals and regulatory compliance is a strong asset. Her advocacy for safer opioid alternatives and experience in clinical trials positions DMAAU well. Glenn Werman's financial background ensures experienced management of DMAAU's financial processes. His abilities in organizational controls and liquidity strategies are significant in the SPAC landscape. The IPO structure is also interesting. Each unit includes a right to receive 1/10 of an ordinary share upon a business combination. This incentivizes shareholders to stay invested through the acquisition phase. The $10 price point is typical for SPAC IPOs, signaling a standard risk-reward profile. However, there are risks. DMAAU has no operating history or revenue. Investors are essentially betting on the management team's ability to find a valuable acquisition target. The pharmaceutical industry is highly competitive, with significant regulatory hurdles. The success of this SPAC depends entirely on identifying and completing a successful business combination. If no acquisition occurs, investors may only receive their initial investment back. In conclusion, Drugs Made in America Acquisition Corp presents a standard SPAC opportunity. The experienced leadership team offers expertise in plant-based pharmaceuticals and financial services. While the lack of current revenue or operations poses risks, the clear focus on a growing and potentially lucrative sector may attract investors. This IPO will appeal to those who believe in plant-based medical innovations and trust in the leadership's ability to execute a successful acquisition. However, like all SPACs, there are inherent risks due to its speculative nature. Thanks for watching. Be sure to do your own research and consult with a financial advisor before making any investment decisions. We have an IPO discussion group where you can connect with enthusiastic people just like you. The link is in the description. Do join, which is completely free.